Welcome, ladies and gentlemen, Minds and Money 2018 here in London, Commodity TV for you. And with me here is now Professor Dr. Thorsten Denin from Lynkeus Capital. And we want to talk about copper gold and, of course, gold and cryptos. Thorsten, good morning.
Good morning, Jochen.
Great to have you here. We have seen us a lot of times actually in the last 6 weeks, but still a lot of good themes to talk about. Let's talk about copper and gold, because I think that's also one theme on your presentation here. What's up there?
Yeah, I think lots of the commodity themes are in high favor in this market conditions, where commodity markets as a general are on the lowest level again this year, 52 weeks low this morning. So people look for opportunities here in the market. And when people look at gold and copper, they're looking at actually two opportunities. Gold, compared to its historic average, is cheap. Copper came back from its highs as well. But people are asking what is the better investment actually on both of them, and it's a question on timing here.
Okay, so actually what is then the better thing? I mean, copper for sure is battery metal. It's the next, let's call it, not hype, but let's say the next big thing in e-mobility. We need a lot of copper for that. We need a lot of copper to build the Silk Road, from Beijing to Rotterdam, for example, or to Europe, let's call it like that way, what the Chinese are doing. And so where do you see the more favorite? Gold is maybe security, copper is more industrial and e-mobility.
Yeah, I would prefer that the Silk Road actually is paved by gold in terms of color and endurance on that one. Would be also good for the gold price on that topic.
Okay.
And we had basically a usage back into the gold space again. But as you said, it's two very separate ways of investment. The copper use and demand actually is very high geared to economic growth, to GDP growth, to IP growth, and the future trend here is electrification, that is no doubt. This is a big thing, a revolutionary thing, probably from the whole commodity demand, a new China effect. When we talk about using 50 to 60 kilograms more copper per car, than using more copper per energy storage and things, because lots of people still think...
infrastructure, not to forget.
And the infrastructure, like the Silk Road, because lots of people think the battery space and the energy storage electrification is all about cobalt, lithium. No, it's also on nickel, it's on graphite, and especially on copper. But timing-wise, I think this is the most important thing. When you look forward, this year, copper...
Good time now for copper to invest?
No, it's too early, actually.
Oh, really?
Yes.
Okay. That's interesting.
And I'll tell you exactly why.
Tell me why, please.
Like in the song, Tell Me Why. It is the supply growth you've seen in 2018 that is coming in the market. You have 15 to 18% supply growth in the moment.
From where does that come?
From Chile, from lots of little projects in combination. Supply is a little bit surprising to the upside here. And copper probably has the same correlation to the financial markets, and financial markets coming to the correction space in the moment. So I think copper is a fantastic investment in the medium to long term on the metal price. And I'm also saying that some of the copper projects listed on the equity space, some of the copper development and producing stories, in the moment have an interesting price level, that's true. But the opportunity might be that in 3, 6 months, 9 months, there is probably a better time for people who would like to have a timing right. If you prefer to stay with the topic, electrification, lots of demand growth from the Silk Road, from infrastructure building, but the next big China effect is coming from electrification. This is the copper case, and you got it right when you look at this space very careful and invest in the right projects. But I think short-term opportunities look much better for gold.
Okay, and why is gold now all of a sudden in favor? Because to me it looked like 2018 gold, who cares?
Exactly.
Nobody needs it.
Exactly, nobody needs this, who cares, what is gold anyway? Why do we need gold at all, right? And this is normally the best time for the contrarian investor, for the investor to make the first bets in the market. Nobody wants to invest. I mean, there are still a certain investor base in the gold space, in the precious metal space, when you look at gold, silver, or the PGM space. But the reason is more to be on the safe side in terms of financial markets. Fed is supposed to be a little bit more careful on the interest rate rise for 2019. They had done their path in 2018. So there's a combination about the interest rate, about real rates, that is not at all hurting the gold market, but it's hurting the financial markets in terms of earnings growth, it's hurting in terms of bond valuation, and people who want to be careful in terms of geopolitics and other risk factors, they're going to the precious metal space again, because they got burned from the crypto space. People who got into the crypto space saw the Bitcoin bubble burst at the $20,000 level, and actually yesterday night was the first time again that Bitcoin to dollar dropped below $4,000, so it's above 80%.
It was like minus 10% or something,
Minus
right?
10% yesterday. That makes the sum since the peak minus 80%. So basically you can say the bubble burst and people are looking for the alternatives and a combination about to get the money out of the financial system.
Okay, so you said me before the interview that gold, or let's put it that way, a cryptocurrency covered by gold, or backed by gold, I would say, yeah? Is that something for the future, or how do you rate gold and cryptos together?
That's a new development. I mean, looking at cryptocurrencies, like the crypto space, looking at the commodity markets, especially gold markets and crypto have been not so good friends in the past, because the gold community said, the cryptocurrency space, they're like getting money out of the system, people invest on the cryptos, there was a big hype on that. Chinese investors bought up the cryptocurrencies because of the kind of money laundering scheme. Then became the financial authorities about automatic information exchange. The door got shut and the price of crypto was smashing down. The typical scheme of a bubble. But actually, if you compare this interesting technology, the crypto aspect, and the high volatility with what gold can deliver in terms of store of value, so the combination of both, to have like a gold-backed cryptocurrency, the digitalization of gold makes it for investor as an alternative payment schedule. You can pay in gold, but you don't need to put your bar on the table, you don't need to put your coin on the table. Yeah, you have your credit card, for example, and on your credit card as a debit system, there is like 1 kilo of gold and you buy a coffee at Starbucks. And the coffee at Starbucks is, for example, deducting 0.001 gram of gold, instead of things. So you don't need to get some physical gold on the table. But here it's exactly the same like in the other financial product space. It's really careful to see if there's really a gold backing or could be some kind of fraud. Because the system looks very interesting, but it's in the details. The devil is in the details again.
Okay, so that means I can own golds, but if I work in addition with the cryptos, then if I back it with that, I'm still flexible to really purchase or do business through the internet, for example, pay via the cryptos, and but still I have my safe haven.
Yeah, people and investors especially, they want to have the best of two worlds, and there are ways how they can realize it. But again, due diligence is key. There are lots of companies providing the services, and probably one or two will prevail on that scheme, and the others maybe they are like some black sheep, and people need to really find out who is the black sheep, who they can trust their money with and their gold with.
Definitely. Super. Thorsten, thank you very much. It was really interesting. And let's see what 2019 brings.
Pleasure. Hopefully higher commodity prices.
Absolutely.
On that.
That's what we are all in for. Thank you very much, Thorsten.
Pleasure.
Ladies and gentlemen, it was Professor Dr. Thorsten Delin from Lynkeus Capital. And you heard it. Copper is probably the next 6 to 9 months is back again in favor, as he alluded to. And what was also new for me is that we have such a higher supply growth this year in 2018, but still the growth in the demand from 2019 onwards with all those, let's say, 50 to 80 new mobile models coming on stream onto the market, and a lot of more copper will be used for that, also for the infrastructure that will, for my understanding, outbalance that oversupply. And for sure, I have a good feeling that we are going back into physical deficits by 2020 onwards. And also gold, always good for security. Store of wealth, safe haven, that's what we need. Gold and cryptos, a new concept, very interesting and probably a workable and doable future to combine both and stay flexible. So check it out. Thanks for watching us. Bye-bye from London and Merry Christmas.